Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock. With news, equity markets may be up, but the economic news is still grim. The May edition of the Fed's Beige Book surveys is depressing reading. It summarises all the regional Fed districts and can't find many positives at all. They say there is hope overall activity will pick up as businesses reopen, but their outlook remains highly uncertain, and most surveyed were pessimistic about the potential pace of recovery. Employment and wages were all both very negative. There is more evidence from the weekly Johnson Redbook survey of retail activity in the US. Last week there was yet another decline, both year on year and month on month, even if the scale of these declines is lessening. And more very large job layoffs were announced overnight worldwide. But if you're looking for positives, perhaps the rise in American mortgage applications are what you need. Also rising is the scale of the Fed's balance sheet. The overall level indicates just how much monetary policy support their QE machine is pumping in to keep their economy functioning. And it is massive even compared with what Congress has done. It is a balance sheet that has just moved on up over $7 trillion, now $103 billion in the latest week, and up $2.7 trillion since mid-March. It is actually up $2.725 trillion, so the rounding here, 25 billion or 40 billion New Zealand dollars, is actually almost the same as the RBNZ's own total balance sheet size. The US Fed is on a completely different planet. In the EU, they have announced a 1.4 trillion recovery plan and a 2 trillion budget over the next 7 years, which, if approved, would deepen its economic union in a way that even the Eurozone debt crisis failed to achieve. And it's not been a great 24 hours for China on the diplomatic front. The US says it's moving to remove Hong Kong's special status with them, and the Huawei extradition case in Canada has gone against them. In Hong Kong, the big money is siding with China. The Hong Kong people, however, are taking to the streets. And it hasn't been great for them on the data front either, with industrial profits for April down sharply and their recovery seeming a long way off. Default risk is rising for many large companies. And China may be facing a recession in the second quarter of 2020. The US Treasury 10-year yield is down 2 basis points today to 0.67%. The gold price is basically unchanged at $1,713 an ounce. And oil prices are softer today by about $1 a barrel. The US crude price is now just under $33 a barrel, and the international oil price is just under $35 a barrel. And the Kiwi dollar has softened slightly overnight. We're now just on 61.7 US cents. On the cross rates, we're marginally higher at 93.5 Australian cents. Against the euro, we're lower to 56.2 euro cents. That means our trade-weighted index has slipped to 67.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.